O să trec acum pentru scurt timp în limba engleză. And we will talk about the banking system and how the relationship with the clients has changed during the past years, considering the digitalization. And I know you have something prepared for us, and I want to ask you to tell us when do you want to show and play the video. And before, the video first.
I have many stuff for you today. So,
thank you.
But we can start with this. I want to...
Ciprian, putem să punem video?
Let me share. So the question is how we evolved, or how we are going to evolve in the future with the, the client relationship. So first, I would like to remind you how it is today. Is the, let's say, let me share it. How it is today in terms of the relationship with the clients, right? So, we talked about AI, and, I want to show you a little bit, remind you how it looks today as a simulation of a normal bank branch. So, the bank starts at 9 o'clock. We have some cashiers, tellers. We have maybe 2 retail RMs, 1 SME RM. And the clients come for different types of transactions. Some people come for money deposit, money withdrawal, credit card payments. I don't know if they are visible there, but... and also some people come for retail relationship manager, mortgage application, personal loan applications, and some come for the SME commercial part. They want to make an own application, transaction advisory, and advisory. So what happens during the day in a suitable, in the traditional conventional bank branch, right? So let's run to see what happens. A little bit quick. I chose this animation because it's, I also published this somewhere like an Atari one because I'm grown with this. So at 5:17, the bank branch finishes. I am not going to make a slow motion of that, but how we see today, what happens, because we have some problems at the bank, right? So now what we see at the branches, so retail relationship is usually overloaded. If you are not looking at, if you are not looking at efficiency measures, and you don't want to play with the, let's say, staff capacity and stuff. And this is, SME relationship is overloaded, utilization is going over maybe 100%, 150%. There are bottlenecks, and the warning, teller cashier service time under 75% sailing, but for short waits, 3.6 minutes. So we have to cut the, average time. So usually what happens is, what I can say is, we are looking for efficiencies in the bank branch without looking at the capacity. So what does it say? By the way, this is running with a suitable statistical distribution behind. So, if you are accustomed with the statistics, exponential distribution governs the time between the clients who are coming to the branch. So there's a mean of that, and mean for cashiers and mean for SMEs and relationships are different if you go and measure stuff. So what I can say is you have to decrease 23 minutes to mortgage application, at least personal loans 15 minutes and 7 minutes. So what we are doing in a conventional branch today is either because we want to serve the clients, we want to, there's a demand. First of all, we have to anticipate the demand. We have to anticipate the demand. We have to anticipate how many people are going to come to the branch. The branch is open until 5 o'clock. And there's going to be a queue at the branch or not. So there's a space problem. So the space problem has to be solved. Where are they going to wait? If they are going to wait, for example, here I made 20 minutes and they leave. And what we see here is, for example, in the retail part, 21 clients lost and SME 10 clients lost. It is a usual, Romanian bank branch. You can say the numbers are close to the, let's say, reality. But today, this is the very conventional branch. We have no either alternative. So what happens? So what we do is, now, changing the relationship model a little bit. Now we are putting the digital banking in place, right? The digital banking in place, what does it do? First of all, face-to-face, we are removing the face-to-face applications from the branch. We are not doing any more batch processing. We are not doing a product push there. We are not bound with 9 to 5 queue-based service. And first of all, the bank owns the client. So it is very difficult for a client to switch between the banks. So for a small bank, to be able to acquire a branch or to customer from another bank is very difficult. And for the client, it's like a hell because they're stuck there. So now what happens? Now we are at the end of this era. We are going to be looking at the agentic part, agentic AI part. But before that, now trust is built through apps, customer experience, and speed and transparency is moved to the mobile banks. And real-time balances, we are now in an era where also it's a generational thing, but everyone wants everything immediately, fast, before they even anticipate it. So we are trying to do the real-time balance checks, instant notifications, payments, personalized, predictive, and segmented clients, let's say customized notifications, customized services, pricing, everything else. And it has to be 24/7. We have to predict what can come at night after the branch is closed. It's at the weekend, might be at the vacation, it might be somewhere else, location free. And we have to do a conversational and communicative services 24/7. So customers, of course, is also going to help from the customer's perspective, because we are talking from the customer's perspective, to switch between the banks. What we see in Romania today, for example, average customer has more than 4 accounts in different banks, and most of them are having 2 or 3 of them active, because now it's very easy to switch, it's very easy to open accounts for everywhere. So this is a general trend. It's going to be also happening more and more. So this is actually what we are seeing in general.
Tell us a bit about, thank you for the presentation, the details. Tell us a bit, how do you think the future bank will look like, and what are the main challenges and the tendencies for the next 3 to 5 years?
So, according to me, or according to us, let's say, first of all, the major trend is now going to a very much, I will fast forward, let's say 2040. It's very easy to talk about the future because I can't say anything. But now looking at the trends and looking at what's happening, first of all, the major thing is becoming is agentic AI dominance. This is going to be impacting for all our, let's say, transactions, especially the money movements, and also our decision-making, service to the clients, etc. If you don't mind, I will also show a small video for this, if you can. Showing
video,
economy.
Video? Imediat. Just
what will happen, how we picture it.
It starts the way every story starts, with a need. The last one is gone, and the house already knows. An agent awakens. It orders, it pays, within the limits you set. Money at the speed of light. Before you reach the door, it is already done. Welcome to Agentopolis. Somewhere, a machine is running low. One part, one warning, one quiet signal. The agent moves, it finds the supplier, and settles the deal. Payment clears between machines in real time. The parts are already on the road, the line never stops. Welcome to Agentopolis. Here, the customers are not human. An agent hits its limit, out of tokens, out of time. So it does what we would, it buys more, and it pays on its own. Machine pays machine, a fraction of a cent in milliseconds. And the work simply continues. Welcome to Agentopolis.
So basically, this is how we are picturing, or I am picturing at least the future. But how this economy is going to function, if I can share also again, I'm just going to show. If it's clear, yeah. So I have built a comparison between an agentic economy versus the current economy in terms of money movements and banking. So today's world is, especially in the money movement perspective, consists of households, merchants, issuing banks, acquiring banks, card networks, clearing houses, EFT operators, employers, central bank, so on and so forth. And if we go to agentic economy, what we are seeing is the new players, and all these issuers, acquirers are disappearing from the middle. And also, what is introduced here is stable coins, micropayments. Stable coins are going to be replacing especially in the token economy. So if I run this, let's say from the beginning, as you see, the information and transaction flows are going to be, compared to today's world, I'm not going to take too much time of yours, but just to show you the dashboard compared to what happens. So authorization, settlement, and also average set in transit 0, average settlement time goes below 1 second, and compared to today, authorization transactions are even 100%, settlement is going to up to 40%, and in transit is 3.5 million, but there's 0. So for example, here abandoned applications, fees paid is huge compared to fees paid to tomorrow's economy. What happens if there's a, for example, crisis, right? We are all talking about crisis risks. If, for example, there's an energy shortage, what happens? In terms of energy shortage, what we are expecting, the future's economy, future banking system, future, let's say, players are going to be reacting in terms of seconds, because they are going to understand, we are going to understand what's happening and take precautions immediately. And compared to today's world, if there's an energy shortage, as you see, Agentopolis is going to be still around 90%, let's say, system health. Throughput is going to be still much higher than the current part, and so on and so forth. This is actually what we are looking forward to. Of course, it's a little bit more, let's say, an advanced society and an advancement very quick, very fast forward. However, I think looking at today's world and looking at the direction, we are, the pace is now exponential, a little bit hyperbolic. So we are going to find ourselves in such a world, and we are going to be dealing with the, let's say, who is there and who is not there anymore.
Okay, thank you very much for your presentation. If you want to talk a bit about the threat of cyber attacks in this world, very short, please.
Very short. Okay. If you're asking me, cyber attacks is not my major cyber security problem. According to me, this is actually the biggest problem. If you ask me, let me, if I can find it, this. And we had some, let's say, we had some incidences last week, which also supports my, let's say, opinion. So today, financial system firms, 88% are using less than 4 companies, which are actually ruling the all infrastructure for artificial intelligence and also, for the new generation of tools. 91% are using Microsoft's OpenAI stack tools. So the vulnerability is now all the financial system is unfortunately moving towards, let's say, the hands of a couple of players. And last week is, the cloud incident, which I was using Fable, let's say, immediately when it was published, launched. I developed some, let's say, applications, but immediately they cut it. For example, imagine that all financial system is relying on Google, OpenAI, Anthropic, and then there's a vulnerability in one of them, or they are going to cut the, stop the engine, and we are all going to be in their hands. This is actually, if you ask me, concentration is the biggest problem, especially in the EU side. If you are talking about all these players, they are also cross-Atlantic players. So if we are not going to be more pragmatic in our own place, including Romania, we are going to most probably dealing with more geopolitical and more, let's say, important problems rather than a deep fake, rather than something else that we are talking about. And compute today, for example, is going to be a big, compute power is going to be a big strategical asset, like uranium, most probably. So that's one of the reasons that Mythos and Fable are not allowed in EU territory and other than America. And this is actually, if you are asking me, being the biggest cyber security problem for not only for EU, but globally. In 2018, McKinsey issued a report, launched a report, showing the digital, Romania digital, let's say, potential, what it can end. So in 2018, they said that, if we do this, it can produce up to 52 billion euros additional of GDP. Now, I just, made a comparison to make a comparison, and from this I'm going to jump to something else. From fixed connectivity, in the report said European leader in ultra-fast broadband subscriptions, and still in the connectivity part, in European perspective, Romania is still the leader. 90% infrastructure, connectivity is fine. However, mobile 5G coverage is 32.8%, lowest in EU. It is worse than where we started. ICT specialists, 1.9% of workforce versus 4.8%. Frontrunners, this is flat. And talent is not retained in Romania. Digital skills, worse. And Romania is in the bottom of EU in terms of digital skills, 31.8% basic digital skills, and 80% is the target. I mean, this is very weak. SME enterprise adoption, large gaps in e-commerce, cloud, big data, 40% of all e-commerce of the population. It is at the last section of the European Union. AI use just 5.2%, lowest in EU now. E-government, lowest uptake Romanian digital challengers despite spending, it's considered flat. Startup ecosystems, 28 startups per million. UiPath, thanks to UiPath and 3 unicorns, now we are okay. But they are not here majorly. Access to capital, venture capital, 1/15 of EU average. We see up to 84 million per year. This is a mixed. So what I'm going to come to also in other things for the AI adoption is because we are talking about, we talked about the skill set. This is major, let's say, obstacle. Only 17.8% of Romanians are using generative AI. 56.6% EOT devices, Internet of Things device users in Romania. EU is 70%. 92% mobile internet adopters compared to 89%. Looking at this and looking at this doesn't match. So why Romanians don't use AI tools? This is the danger. Because people think that they don't need it. This breaks curiosity. 38% says that I don't need it, I don't want to use it. Didn't know they exist, 27%. We are forgetting something. We are doing these panels and stuff. I'm also contributing, trying to contribute. But 50% of Romania is still in the rural areas. I mean, now we are 18 million and 9 million still living there. Didn't know how to use it, 19%. This can be okay. Private security concerns, 11%. So trust is not the issue. It is all about the curiosity, pushing, and teaching people, and skill set development. And in terms of actions, by the way, we talk about e-state. Now we also had some guests here about, talking about digitalization of Romania. And I will start from here, for example. 10% of Romanians use e-government services for obtaining information versus 47% EU. Because we don't have e-government services in Romania. This means, what? For example, 13 hours per year per citizen. Let's say that 5 million people are going to, take services from ANA, from tax authorities, or somewhere else. 5 million times 13 hours means 65 million hours are lost in the Romanian economy. Because we are during the work days, right? We are going from the work, we are going there, spending some hours, so on and so forth. I see that, but yes. Why not? So 13 hours you spend per year in a government service. So 13 hours in a year. So you go there 2 hours, someone goes there 2 hours. It doesn't mean that you lose from the economy. If you're talking about the retired person going to that or the child going to that, it's not a problem. But 13 hours, then think about the efficiency from the state perspective, the public spending. So you are keeping some, what?
Work very fast, but when do we give the opportunity for two people to interact with each other?
I don't agree with this, I'm sorry.
Actually,
okay.
Sorry, I spent about quite a few years in trying to automate, and just as an example, trying to automate and give a nurse less time with a patient because things are being very, very fast. And processes that were being spent 7 or 8 minutes in interacting with someone, with the patient, became just 30 seconds to 45 seconds. Those last 7 minutes were somebody's last minutes of their life.
First of all, there are two things here. First, when we look at a factory, because I worked also in the factory floor, first there you look at two things. If you need that service or not, if you need that job or not. First of all, elimination of tasks. Second, automation of tasks. 13 hours, per year is a huge loss from a person's time, if you ask me. You might not agree. it's a different story, but let's not take the time,
Okay,
right?
let's continue this
So
after. I want to continue the discussion.
Only one thing I'm going to say, because we talked about actions. I come with some, let's say, strategic initiatives, digital skills national program. The school we have to start at school, let's say, AI skill set development or IT skill set development. E-government, we have to start the e-government acceleration. Financial digitalization strategy, it is also up to your let's say, valuable guests today. They have to develop and come and approve and execute it. Infrastructure is a problem at this point, at the rural areas especially. We have to build on stuff. Ecosystem has to be, 2 days ago, also Demis Hassabis issued a, let's say, nice article. It's not a model issue, it's not an infrastructure issue, it's an ecosystem issue. If one of them, if only one person just uses it and the others don't use it, and it's going to be stuck and it's going to be a slave to the provider. And digital economy measurements, execution, of course, it has to be measured.
Thank you. There are, of course, a few steps that have been mentioned, and thank you very much for your input.